right, guys, welcome back to this week's episode of Tuesday Tips with Ryder Realty. I'm here again with Jason Kruger. We are trying to get all your finances straight for the new year. And so today we're going to be talking about, I can't get approved. Now what? We want to help you guys better your credit, better your stuff, and get you all situated if you are planning on buying a house in 2021. So, Jason,
all right.
You have a client come to you. They got some bad news. They can't get approved. Talk to us about what they can do.
Okay, so what we need to do is establish a plan, and everybody's situation is different. Mm-hmm. Okay. Sometimes they're calling me because they had a recent bankruptcy, and I have to advise them on, their waiting periods on when they can expect to potentially purchase a home. Mm-hmm. Other times, it's a matter of they're utilizing way too much on their credit cards. Okay, so 35%, from what I'm told, 35% of the algorithm for credit bureaus is based upon your credit utilization on your revolving trade lines, credit cards. Okay, so sometimes it's a matter of, I've had people call me that they don't qualify based off, minimum credit score criteria. I have a credit simulator that I can pop in different scenarios on them paying down some debt that they have and what kind of time frame we can look at as far as getting you pre-approved. And I can project this thing out over up to a 2 year period, assuming all payments are made on time. So we need to figure out, if it's credit based, how to get your scores up. Okay. If it's income based, that's another conversation, right? Mm-hmm. So maybe it's a matter of they don't qualify for because they have too much in debt, or they have too many vehicles in their name, or high vehicle payments in their name.
That's called your debt to income ratio.
Yep. So to qualify for a loan, you have to hit all three boxes: your income, assets, and credit. So we have to determine which one of those three that you're not qualifying for a house in, and then help you with that as far as, improving scores, or maybe it's, has to do with the type of job you're in, where you're commission based or self-employed, and there's waiting periods or, stuff like that. So we have to determine why you're not qualifying and give you a game plan to make you qualify. But I will tell you, more times than not, the biggest thing is going to be credit card utilization, slow pays. Those are things. And you got to get away from those slow pays because if you
slow pays as in like
30 days, if you go 30 days or more on any kind of trade line you have, your credit is going to drop dramatically.
Okay.
I always like to give the example of, it's kind of like credit is very similar to dieting. Okay. You have to be on your best behavior for a long time. You start seeing results. Okay. But if you go off track, for, in my case, a weekend, and it could take me a month to lose 5 pounds, and I could have a really bad weekend, and all of a sudden I gain 10 pounds back. Credit's the same way. As soon as you have a late payment, you get waxed as far as your credit score. Somebody recently had a slow pay on her car. 30 days late, credit score dropped 60 points. Huge. Okay. Yeah. So through my projections, it literally is going to take her at least a year before she's going to be able to purchase again. Very important. Pay those loans on time. Never go more than 30, don't be 30 days late on anything, because your credit score is going to suffer dramatically.
So if you do have a lot of credit card debt and stuff, do you think that's something that somebody should pay off all at once if they're able to, or is it better to chip away at it?
I mean, if you have it sometimes it's a combination of, because, you might have to put money down on a house. And in a situation, I have people call me and they've got a baby on the way and they've got to get in the house as soon as possible. I'm a big Dave Ramsey guy. I don't like credit card debt. Okay. But, so from a life standpoint, I would say it's always best to try to knock out that credit card debt. But if you're just in a situation where you absolutely need to get in a house, sometimes it's a want, but let's just say you need to get in a house. You've outgrown your house. You got a child on the way. I would tell you, we have to figure out that fine line of paying down debt while keeping your bank assets in line to be able to qualify for a house. So, and that's so specific to their situation.
Yeah.
So until somebody looks at it, gets under the hood, nobody's going to be able to tell you exactly what you should do. But I'm a firm believer in not carrying credit card debt. Credit card debt has been normalized in society. People are okay. Like, literally don't think twice. Like, that's just part of their, I've got 20 grand in credit card debt. I've got, my car payment. I got my mortgage. I got my student loans. Like, all that's just been normalized. But I would say that it's really hard to get out of that credit card debt just with the terms that are on those cards.
Right.
Making minimum payments, you literally will never pay that thing off.
Yeah. Minimum payments, I think, are definitely like, people think, it'll be fine. I'll keep making this payment, but you have to make more than the minimum payment to cut away at anything.
Oh yeah, and I'm not saying this out of judgment. Listen, I've been in I've been in credit card debt. Okay,
Don't look at my TJ Maxx card right now.
Yeah, I have seen the full spectrum personally on credit scores. Yeah, I've been late on a car. I've been 60 days late on a car. I've carried more credit card debt than I will put on this podcast and let you know. Okay. And sometimes it's just a matter of life happens and you can't control it. Okay. Some people just have spending problems and some people have money problems or income problems. Okay. And mine would fall under 90% of that. It was just an income standpoint why I was in the situation where I was. So yeah, I've gotten myself in trouble a few times. I could proudly say I haven't paid a finance charge on a credit card since June of 2013.
Woohoo.
Okay, so it's very important to make sure if you can get rid of credit cards. Absolutely, I'm game for it. I love telling people like, hey, if you want to get in now, or hey, let's look at this, clean that up, save some money. But if you have to get in a house right now, let's try to figure out the fastest way possible and then go from there.
So my generation specifically, yours probably too, student loan debt is like a big thing. Of course, it's normalized like you were talking about earlier. How much of that really affects people getting into a house?
Well, it's a big deal. If you have marginal to bad credit, we're going to have to, more likely than not, put you into an FHA style loan. How FHA views the student loans is different than some conventional loans. You might be on an income-based repayment plan, or you might be deferred. But now I got to hit you on an FHA loan. Your loan's deferred, your student loan's deferred. I have to hit you for 1% of the balance on as far as a monthly payment. That could impact your buying power. Income-based, I do a lot with the conventional loans where it's income-based and their payments are minimal on there. So you're able to, purchase a house. The income-based repayment plan on that $30,000 loan might be $120, so or something like that. Or sometimes nothing. Like I've had income-based where they literally don't have to make a mortgage payment. We can actually use zero. So because their income base is zero. But yeah, that's a big one that I see frequently. You're going to get penalized more if your credit's worse on the student loans.
Recently too, with COVID and them being deferred, I've had a couple of my buyers say that there's some weird stuff going on right now with the student loans and with them all being deferred. Can you give us a little bit of details on that?
Yeah, the secondary market where all these loans go to, we've reacted to that. A lot of these loans just automatically went into deferment with the COVID going on. They just literally deferred everybody. So in those cases, we have to look at specifics, and maybe it's a particular loan we're looking at their income-based repayment plan when it wasn't automatically sent back to, deferment. Speaking on that, I know we were talking about student loans, with COVID hitting, there was a lot of people taking advantage on not making their mortgage payment. So, but yeah, you have to, if we're taking advantage of that program, you're going to have to get back in repayment. And I think the last time I looked, you had to make 3 consecutive payments on time from being in forbearance or your mortgage and deferment before you would qualify for a new loan.
All right. So we had talked about like checking all the boxes. So I think we kind of covered a little bit of that debt in that part of it. What are some tips maybe to improve income other than switching jobs? It's
important to stay stable, right? And jump into a new company right now may or may not be the best thing with everything that's going on with still with COVID and the economy. A big way to improve your debt to income ratios is what we're trying to do here is paying down debt. I know we talked about that. People get side hustles, I mean, my wife's making crafts like every day. We talked about this before we went on here, but my house has turned into a craft machine. So I would say Dave Ramsey will talk about this all the time. If you don't know who Dave Ramsey is, Google him, and he's got a lot of great information. I follow him on Facebook. He watched probably at least one of his podcasts a week to keep me from doing something stupid. But side hustles are great. They're a great way for you to generate more income without taking on that new job. And more times than not, these side hustles are going to pay you better. I don't know. Yeah. There's walking dog services. There's a lot of different things that you can do. Babysitting. Today's Friday. My wife's babysitting one of our neighbor's kids who likes me now finally after 3 months of doing it. But side hustles are a big thing to do that. More than that, you can give yourself a raise just by cutting out some garbage things that you spend money on. Yeah. Everybody's guilty. I'm guilty of that. You have to sit down and get real with like, okay, what's my budget? What do I want to do? People are just like, I can afford this payment. Well, let's look at your debt. Let's look at, I'm not saying I go through all this stuff with every client. Okay. But there are people that, you're just going to have to change your habits.
Right. Like spending $100 a month on Starbucks.
Yes. Which is a need. Yeah. I mean, you can do that. There's so many different ways. I mean, it's funny. You see some of these millionaires, they're cheaper than people that have, way less money. I mean, they would never spend $4.95 on the Grande Nitro cold brew that I got this morning, but yeah, you're going to have to change your habits. If you keep doing what you've done, right? I mean,
you got to change.
Yeah, you're always going to get what you got, right?
So you spent $4.95 at Starbucks for coffee. This morning I spent $4 and some change, and I got an iced coffee and 2 donuts at Dunkin' Donuts.
Oh man, I got ripped off. Yeah.
So maybe just switching from Starbucks to Dunkin' can help some people out.
Well, I will say I do allow myself 2 nitro cold brews a week because I love them and they give me a lot of energy. And I knew I was doing this, so I had to bring my A game today. So I allow myself 2 of those a week. They're so stupid to spend that kind of money on. But I did see...
But you set yourself a limit. You set yourself a budget.
Yep.
So then you can still have what you like and just in moderation.
Yes. Instead of having it 7 days a week, I'll do it 2 days a week. So yes, but all those things, you got to consistently look at all these things. If you're not in a good financial situation, you have to look at side hustles, budgeting, needs and wants. You have to do that and not make it okay just to continue on. Sometimes you have to hit rock bottom. I did. I mean, I hit rock bottom financially. And I had to look myself in the mirror. I had to work my way out of it. Okay. And I did. And, but like I said, I've seen the whole spectrum from a credit score standpoint. Okay. My credit score was in the 580s back in the day. And now I'm proud to say that my credit score right now, is 817 last time I checked. So,
nice.
But yeah, I've seen it all. So I'm a good resource when it comes to that and be able to help somebody, get them on the right path. Sometimes it's just by having a conversation. I'm not a financial advisor. Okay. And I tell them, but, I've given out a lot of total money makeover books in my day, to help people. So.
Oh, really? I didn't know you had those.
I do.
I might have to take some of those from you because I'd like to give those out to some people too.
Yeah, absolutely.
One more thing that I'm thinking of off the top of my head is I had some clients recently. They had done the whole pre-qual with a lender. They thought they were pre-qualified. We started to write an offer. We found out their budget drastically changed once those documents started coming in. And so that offer was halted. And then we moved on to another house later and their budget drastically increased like $50,000 higher because they had went and traded in a car and got a much lower car payment. Like they took like $300 off of their car payment.
Oh, yeah.
So I think that's something that somebody can look at and say, oh, I don't need this super fancy car. I can settle for an average car if I can get into a house. Like you have to kind of balance your wants and needs and realize that can drastically change somebody's situation.
Do you want your dream house? Do you want your dream car?
Yeah.
I mean,
absolutely.
I see credit cards. Okay, we've talked about, but I see vehicle payments that absolutely rob people of their ability to be free mentally and financially.
Yeah.
I'm talking people making very little money, rolling around in north of $600 car payments a month. I have no idea how they do it. There's a reason why they don't have a lot in the bank. There's a reason why their credit card debt is, going up, but you have to figure out, what those are huge because when you're, like you said, you got them at a different price point, right? They lowered their car payment.
Yeah.
You're really pre-approved for a max payment. Okay. And what we do as lenders, we try to correlate that purchase price to it. Okay. And so when you're reducing your installment loan there, your payment there, your ability to buy more because now you've got more money left over to buy and, what we call debt to income in our world. You've lowered your debt to income because you've lowered your car payment. And that allows you to purchase more house, have more buying power on the house.
And that's something you can change. You can't necessarily always change your student loans. Those are kind of set without refinancing and that stuff, which they might have already been refinanced in your situation. But that is something you can change.
Oh, yeah. Yeah, absolutely. I've seen situations, too, where maybe they just happen to have 2 car loans. For whatever reason, they put both car loans in their name. Okay. And the one spouse has, better credit. And I'm like, wait a minute, hold on a second. You're only on this loan, but now I got to hit you with 2 car payments. But what we need to do is get one of those car payments out of your name completely, so that's something that we'll do. I mean, as well to help like, hey, let's strategize.
Yeah.
That's really hurting you, those car payments. Pay it off or get it out of your name.
Yeah, absolutely. My husband's car is in his name and mine's in mine. And I think that helps us a lot.
It does. Yep.
And same with our student loans even. Okay, let's go over some tips just to improve that credit score. What can you do to increase it the fastest?
The fastest way is the absolute fastest way, and this doesn't happen very often because of the Fair Credit Reporting Act, but if there's an inaccurate collection, slow pay, anything like inaccurate, okay? I have some people that want to go through a credit company and just dispute everything. Well, they keep their data pretty good now because of the Fair Credit Reporting Act. But if you want to increase your credit score, potentially, everyone's situation is different, but, a collection that popped up recently that shouldn't have been on there, paying it off doesn't remove that collection. Okay. It removes the amount you owe in the collection, but that derogatory is still there. Okay. So getting that credit or that collection deleted off your credit report can drastically change your credit score. Okay. So let's pretend that more times than not, things on credit scores are accurate, but there are some one-offs where they're not. The next thing is always going to be a quick one is getting your credit card utilization. I always like to say below 25%. So what does that mean? If you have $1,000 availability on a credit card, making sure that balance is no more than $250. Okay. And I always tell people that your due date and the date that the creditor reports to the credit agencies are 2 different days. Okay. For instance, my particular credit card, it reports on the 26th of every month, and my credit card is due on the 1st. Now, I know I talk about Dave Ramsey here, but I do have credit cards that I charge. And hopefully he's not listening, but I pay it off every month. They are going to report whatever payment. So if I make my, payment on the 30th and pay it in full, whatever's reporting on the 26th or whatever I had in debt on the 26th is what they're going to report to the credit agencies. Most people don't realize that. Keeping your utilization always under that 25% threshold, don't go above it, then anytime it reports, you're going to be under that. Okay. But yeah, paying down credit card debt is going to be that's the number one go-to that I go to when it comes to rescoring somebody or getting their credit scores up, is paying those down, and never get a collection or, as you're trying to buy a house, no slow pays, pay your bills on time, because you can set yourself back by months or years, by paying things slowly. So
I absolutely wish credit was taught more in high school. I think that things are shoved and pushed on us, and some stuff like your life skills aren't necessarily taught in high school. So I definitely appreciate you coming out here and just teaching people. One more thing that I want to touch base on is, are there things that affect your credit score that maybe people didn't know? Like, is there any surprises? I think one off the top of my head would maybe be like medical bills. I don't think people realize that those can affect your credit.
Medical is a big thing on I think it's an industry thing. Medical collections or medical bills, they're unforeseen circumstances. Nobody plans to go get a surgery, unless you're planning to get hip surgery. I get that. But most of the times you go to the doctor or hospital, it's an unplanned event. So I would say that underwriters don't look at that collection as really a knock against the borrower. Now, doesn't mean your credit report or your credit score isn't going to suffer because of it. But we don't go through and say, hey, you have to pay this medical collection off, because unforeseen circumstance. So I would say, it's tough sometimes because some of these administrators, they don't get it for 30 days, write it off, and you get a collection. So you get popped on that thing quick. So I would say if you get a medical bill and you can't afford paying that, because some of these bills are big, insurance is, coverages have gone down, premiums gone up, coverage has gone down. Okay. And so that's impacted a lot of people. But the first thing I would say is, if you cannot pay your bill off in full, contact wherever you went. And sometimes, there's relief for people, based on your income, and they don't know that your household income is below, median average. So I would contact them immediately, and maybe you can get some relief on that, or set up a payment arrangement and make sure it's automated if you can, if you can't pay it off in full, because these collections, I feel so bad for some people. It's like they literally have no missed payments ever, but they've got 7 medical collections,
right?
And it's it's like, okay, this borrower, I wish medical collections weren't a part of credit scores.
I would say that's probably the one most disputed too, because I think I've heard of a lot of people that didn't even know they had it, and they weren't owing it, but it was turned in, and then they've gone back to the hospital and been able to get that off.
Yeah, and that's where I think if I could be fair with my assessment, when you're going through, the first thing I said is try to get collections off there. I would say that your chances of getting a medical collection off is going to be greater than any other thing that you can potentially get off there, because maybe they're not documenting their stuff, or somebody moved or whatever. I would say over the 12 years I've been doing this, that's the biggest, or I should say the easiest one to get removed, and where I've seen people literally just like. But it's important to get it deleted and not just, hey, I'm going to pay this.
Right.
If it's not correct and or they messed up from a billing standpoint or whatever it might have been. I've had people call me. They've already made the payment directly there. They got sent off to collections and they got it reconciled and they got it off, and their credit jumps up dramatically.
I've heard of it happening to people over like $7.
Oh, yeah.
Just ruins everything for $7.
It's terrible. A $7 collection hits your credit score as much as $1,000 collection. Right. It doesn't matter the dollar amount. It's the fact that you have a collection that hit, and when did it actually hit. I had somebody, we're not talking about medical now, but a particular cable company hit them with a $4 collection right before closing. Dropped this. We literally clear close, do a credit refresh. All of a sudden, a collection popped up. Now we have to re-pull credit. Dropped. And we had, I want to say, I can't remember. This was 2 years ago. I'll never forget. It was like a 60-point drop. And all of a sudden, like, we didn't have a loan, or we would have had to flip it from conventional to FHA. So it was terrible. We ended up getting it fixed. It got it deleted. We had to rescore, delayed closing. So, it was there was a happy ending there. But, collections are terrible.
Yeah, for sure. Okay. Last thing I want to hit, and then I'll let you hit the road and maybe stop at Starbucks on the way home.
Oh, no. I had my two. That's my second one. I'm done.
Okay. Let's talk about what you can do to help save money when you're trying to save up for that down payment and everything.
Besides stop going to Starbucks? Well, you have to look at, the first thing you have to do is budget. If you don't have a budget, you have to see where your money's going. Go pull up. All you have to do is go look at your bank statement, or look at your credit card statement or debit card, bank statement to see what you've been spending your money on. And, cut that and what as much as you can. Some of these like extras that you get, like, if you've got cable and internet and you've got like some movie package, or a lot of people are going to like a YouTube TV, or they're going to like a streaming service where they save on their cable bill. As soon as they have that live sports figured out, I'll probably do something like that. But yeah, you have to budget. You have to look at the stupid spending that you do. Allow yourself for, a budget. The great thing about a budget is if you budget for stupid spending, you can actually put that in your budget.
Oh, yeah.
Like, I can do whatever. This is the amount, whatever I want to do. If you want to do it, you can do that. So you have to do that. I would say, the side hustles are big to help people. That's cash money most of the time. So
I'm thinking in particular of one tip that you had told one of my buyers, so we'll see if you remember it, is about changing your dependents on your taxes.
Changing your dependents on your taxes.
To save more. I believe you told them, so if you're claiming 0 on your...
Oh, yeah. No, I got you. Yeah. Okay. I'm following you. So, yeah, I didn't tell them to change it on their actual tax returns. What I actually told them was, if you're trying to save up money for a down payment or to pay off debt, okay, a lot of people, they like these big tax refunds at the end of the year or at the beginning of the following year. And so what that means is you just paid into your payroll, you've paid more into payroll than you should have. So people think they're getting the refund on money that's just like unfound money. No, that's your money. Okay. Right. Federal tax, they looked at the IRS, based upon your situation, and you paid in, $8,000 through the year, and, you get a $4,000 refund. Well, you overpaid $4,000 throughout the year. Okay. A lot of people don't know this. So I'll talk to them and say, hey, you got to save up money. You have to get in your house. These are where I will say, well, listen, what did you get for your tax free? Because I don't want people to owe, a bunch of money at tax time.
Right.
Some people don't mind doing that. They're used to getting a refund. So let's baby steps here. But I will have them go back to their HR and have them change their withholding. So some people have, they're married, they've got 2 kids, and they're, when they started their job, they were single and they were filing 0, or they just like getting extra money at tax time. But now they need down payment. They need money for their everyday expenses, right? So I'll have them change their withholding from, they might be single 0 or married 1 to, hey, let's back that up and go, change your withholding with them to married 4 or married 5 until you get into your house, and it's going to give you more money in your paycheck. They're going to be withholding less money per paycheck on your actual federal taxes that are coming out. The other thing that I'll tell people, just for the sake of, hey, getting credit card paid off or whatever it might be, if they're in a situation where they're getting a company match, like, you have to be conscious of that. But maybe we're looking at, hey, what are you withholding for your 401k right now as well too? So those two things can allow you to get it might be an extra $300, $500 a month, or more, depending on what situation you're in as far as your withholdings that you have. But
you don't have to do that forever. You can keep it for those couple months and then get back to it after your purchase, and maybe still get some money on your taxes.
Yeah, I tell people that too. Like, don't forget, like, something about, like, if you want all of it, you I don't know how flexible you can get, or married 10, like, now you're getting, like, almost all your stuff, right? Yeah. That's, but yeah, you can change it. But I would say, hey, don't forget, right? You hit to what you need. You got enough for down payment or whatever it might be. Don't forget to change that back to get yourself, in a position where you're not maybe, owing money at tax time. So. All
right, Jason, we appreciate your wealth of knowledge. We're hoping that you helped lots of people. Thank you for taking your time out of your day, and we're just thankful for you to be here.
I appreciate having me here.
All right, guys. Thank you again for tuning in to this week's episode of Tuesday Tips with Rider Realty. Please like, subscribe, share. Give us some feedback on what you want to hear. What can we teach you? Thank you again. Bye.